Welcome to Dubai Daily, your essential morning briefing on Dubai's real estate market, brought to you by Parag Khandelwal, founder and CEO of Consultaa, a Dubai-based real estate consulting and global capital advisory firm. This is episode 50, and today is Friday, January 2nd, 2026. Today, we're kicking off the new year with a crucial topic: a comprehensive update on financing and mortgages. We'll cover 2026 rates, terms, and a look at the major lenders. So let's get straight into it. First, let's set the scene with the overall interest rate environment. The UAE Central Bank's base rate currently sits at 3.65%. The prevailing forecast is for further reductions throughout 2026, potentially bringing that rate towards 3.40% by year-end, and even as low as 3.15% by early 2027. As many of you know, the UAE mirrors the US Federal Reserve's policy due to the dirham's peg to the dollar. With the Fed anticipating around 100 basis points of easing in 2026, we'll see that reflected here. This translates to fixed mortgage rates trending between 3.75% and 4.25%, while variable, EIBOR-linked rates will also decline. Simply put, these cuts will significantly improve borrowing conditions, making mortgages more affordable for everyone. Now let's break down the mortgage rate forecast quarter by quarter. In Q1, expect fixed rates between 3.75% and 4.5%, and variable rates around 3.5% to 4.25%. By Q2, with anticipated Fed cuts in June or July, we could see fixed rates drop to a 3.5% to 4.25% range, and variable rates between 3.25% and 4.0%. Things should stabilize in Q3, with fixed rates settling between 3.5% and 4.0%. Then, by year-end in Q4, we could be looking at a fixed rate environment of 3.5% to 4.0%, and variable rates as low as 3.0% to 3.75%. This downward trend is excellent news, as it boosts market liquidity and activity and, critically, improves affordability for first-time buyers. Let's talk about loan-to-value ratios, or LTVs, which are defined by the central bank. For properties valued above 5 million dirhams, you can expect an LTV of 80 to 85%. For properties below that 5 million mark, it's typically 70 to 75%. First-time buyers may qualify for the higher end of these ranges. For non-residents, the LTV is lower, usually between 50 and 75%, with most lenders sitting in the 60 to 70% range. This means a larger down payment is required, typically 25 to 50%. For UAE residents, the down payments are lower, starting at a 20% minimum for apartments under 5 million dirhams, and perhaps 25 to 30% for higher-priced villas. So, are you eligible? The criteria are quite standard. You must be at least 21 years old, with a maximum age of 60 to 65 at maturity. You'll need stable employment, with at least 6 months in your current role. Income is key. A minimum of 10,000 to 15,000 dirhams a month is needed for first-time buyers, though lenders prefer the 15 to 20,000 range. For perspective, buying an apartment under 2 million dirhams might require a monthly income of 38,000 to 50,000 dirhams. And of course, your debt burden ratio, or DBR, cannot exceed 50% of your total monthly income. A good credit history is absolutely essential, and your residency status will determine the specific conditions you're offered. Now let's briefly compare some of the major lenders. Emirates NBD is known for competitive rates and strong approval rates, especially for salaried expats. Dubai Islamic Bank offers excellent Sharia-compliant products and has strong support for non-residents. Mashreq is very expat-friendly with fast processing, while ADCB is great for high-value properties. And you have the giants like FAB, HSBC, and Standard Chartered, who bring comprehensive products and strong international client focus to the table. It's also important to understand the different mortgage types. Fixed-rate mortgages offer certainty for 2 to 5 years, which is great for budgeting. Variable-rate mortgages are linked to EIBOR and are beneficial in a declining rate environment like the one we expect in 2026. There are also Islamic mortgages, specialized off-plan mortgages, and of course, significant refinancing opportunities for those on older, higher rates. Don't forget the associated costs and fees. Budget for a bank processing fee of about 1 to 1.5% of the loan. A valuation fee around 2,500 dirhams, and the Dubai Land Department's mortgage registration fee of 0.25% of the loan value. Also factor in potential early settlement fees, life insurance, and property insurance. A quick note for our international listeners on non-resident financing. This is available only in freehold areas. As mentioned, expect higher down payments and lower LTVs. Documentation is more extensive, including passports, proof of income from your home country, and bank statements. Interest rates can range from 4 to 6.5%, but you can secure better terms with a strong profile. So how should you approach your financing decisions strategically in 2026? With rates declining, it might be wise to lock in shorter fixed periods of 2 to 3 years and then reassess. Variable rate mortgages are very attractive this year. If you have an existing mortgage at a high rate, now is the time to explore refinancing. Getting pre-approved in January or February will put you in a strong negotiating position for Q1 property launches. This environment opens up some fantastic market opportunities. Lower mortgage costs create a strategic entry window for buyers. Rental investments in high-yield areas like Dubai Marina, Downtown, and JVC remain strong. Off-plan projects with flexible payment plans allow you to leverage financing and benefit from market appreciation. And for first-time buyers, improved affordability and higher LTVs make 2026 a prime year to get on the property ladder. When selecting a lender, my advice is simple. Compare offers from at least 3 to 5 banks. Don't be afraid to negotiate the margin over EIBOR or ask for fee waivers. Look at the key facts statement and the annual percentage rate to understand the total cost, not just the headline rate. Using a mortgage broker can be invaluable here. And don't underestimate the power of an existing banking relationship. Finally, let's wrap up with some clear action items for Q1 2026. 1. Secure your pre-approvals now, in January and February, to be ready for opportunities. 2. Compare lender offers and use the declining rate environment to negotiate favorable terms. 3. If you're an existing mortgage holder, assess your refinancing options. 4. Budget for all costs, not just the down payment. And 5. Seek professional guidance from mortgage brokers and real estate consultants to optimize your decisions. This has been your Dubai Daily Real Estate Briefing. For expert guidance on your property journey, you can contact Parag Kundalwal at Consultaa. You can find him by searching for Parag Kundalwal on LinkedIn, on the website at consultaadxb.com, or via email at parag@consultaadxb.com. His phone number is +971 58-596-4631. Dubai Daily is here for you Monday to Friday. Have a great day.